In this video, we're going to discuss responsibility centers. So a responsibility center is a subunit, a smaller part of an organization in which you have a manager that is being held responsible for costs, for revenues, for profits, and or investments. Okay, so you can have 4 different types of responsibility centers. You could have a cost center, revenue center, profit center, and investment center. So I'm going to go through each of these in detail, give you some examples. So let's take the company Walmart. And let's think about a cost center. So a cost center is going to be a responsibility center where the manager of the cost center is held responsible for the costs of that cost center. For example, the marketing department. Okay, so if we think about Walmart's corporate headquarters, they've got a marketing department, and that marketing department is going to incur costs of advertising and so forth. Okay, and then you could even think of, let's say, the accounting department for Walmart. Also at their corporate headquarters, they've got an accounting department, and that's going to generate costs. So the manager of the accounting department or the manager of the marketing department, they're going to be held responsible for the costs of their respective departments. The accounting department at Walmart is a cost center. We don't expect Walmart's accounting department to bring in any revenue. So it's not going to be a revenue center, and we're definitely not going to have revenues and costs because there's no revenue, so it can't be a profit center. All it does is incur costs. That's all we have from the accounting department. It just costs Walmart money. So we're just going to look at the manager and say, hey, are you doing a good job managing the costs of the accounting department? Or for the marketing manager, the cost of the marketing department. Now, if we think about, and I can't think of a good example related to Walmart for this next one, so let's take a construction company. Could have a sales office. So there's a construction firm, they build residential housing, and let's say they have a sales office that is responsible for selling homes. And so it's just evaluated based on the revenue that it brings in, its sales. So then that sales office would be a revenue center. The manager is just held responsible for how much in terms of sales they're getting, how many houses they're selling, and so forth. Now you might say, well, doesn't that sales office have some costs? I mean, there must be some costs or whatever, utilities or something associated with that sales office. And if you're thinking that, you're right. And so you could say, okay, well, this is actually our next type of center, a profit center, where we have revenues and costs, and the revenue minus the cost is the profit. But in some firms, when they just think, well, look, we're just evaluating this office largely on its revenue, it has very minimal costs, they might just call it a revenue center. Okay, I don't want to confuse you too much, but that's just something you should know. So a profit center, as I've already just kind of mentioned, is when the manager is held responsible not just for revenue, but also for costs. So you've got revenues and expenses, and so then you take the revenue minus expenses, and that's the profit. That's the profit. So an individual Walmart store would be an example of a profit center, because I would imagine that the general manager of this Walmart store, I'm talking just one location, I'm not talking like the corporate headquarters, one Walmart store that you walk into, there's someone who's the manager of that store, and they probably are responsible for and answer for not just the sales of that store, but also the costs. So overall, the profit, so we would call that a profit center, as the manager of that Walmart store is held responsible by top management. They have to answer for both costs and revenues. They're in charge of controlling and managing both. Now, an investment center is not only it's basically a profit center, plus then there would be that the manager would be held responsible for making investments. I'm going to guess that the manager of a Walmart store, just one location, does not have the authority to say, okay, we're going to do an overhaul of the store, and I've decided, I mean, I'm sure they have some input, but there's probably, that's coming from a regional vice president or something like that is making decisions. So if that's the case, so we might think of a larger entity. Let's take Walmart International. So Walmart is, let's say they segment their business into geographic locations, and they have like Walmart US and then Walmart International. Or you could think about Walmart Mexico. If we can get more specific than Walmart International, Walmart Mexico, they probably have the authority to say, okay, what are all the investments we're going to make in Mexico Walmart stores? Or if we think of Walmart International more broadly, of all our international stores. When are we going to update the stores and spend money, make investments to make the stores look nicer and so forth, right? They're spending money. The manager of an individual store, they would be held responsible for profit and loss, so it'd be a profit center, but the regional division of the Walmart would also say, okay, not just the profits and losses of Walmart International, would whoever's in charge of Walmart International, they would answer not just for their profit or loss, but also are they doing a good job with investments, because they would have the authority to make investments across stores probably, whereas maybe a manager of one store doesn't have the authority to make those kind of investments. So that would be the difference between an investment center is basically a profit center where the manager also has the right to make investments.